And Kate, have you got a speaker for me?
Yeah, I've got John Thomas.
I knew I had something to do this afternoon. I just couldn't remember what it was. Okay, so let me share my screen here. Uh, Screen share, and there is me, John Thomas, the legend in his own mind. And we're going to talk about the next American Golden Age and why we are leading the world as an investment destination. Money is pouring in here every month, hundreds of billions of dollars a month, and that sets to continue for the indefinite future. So let me get the PowerPoint started here. And let's see, I think I need a chat box too. Let's see, where do I find that? Chat. There we go. Let's get this up here so I can answer your many insightful questions. Okay, let's see. All right. There we go. And
Um, we're seeing your presenter view right now.
um, then I shall unplug my second screen and hope for the best. How's that?
You want the link at the top, the button at the top of the screen, the black show or view presentation, all the way to the left.
Uh, Use slideshow.
That's it.
There we go. Magic. Thank you, Mr. Zoom. Always has the right answer for everything. This is why he works here. Okay, so again, type questions to the right. When I see breaks, then I'll go ahead and answer them. So the next American Golden Age is here. We're seeing a 1990s replay with the same result, except that it's 1995, not 2000, which means this current bull run has another 5 years to run or more. This is John Thomas, the Mad Hedge Fund Trader, broadcasting to you live from Silicon Valley, California, the center of the universe, as it turns out. Take out your pen and paper to take notes or start typing into your smartphone. What I'm about to tell you will blow you away and change your life. For I am in the early retirement business, your early retirement. Why listen to John Thomas? Well, I have 55 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, time out as a Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, now 16 years publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry who is still breathing. This is the other reason to listen to me. Average annualized return of 51.31% for 12 years. Thank you very much, Mr. AI, which kicked in right about here and doubled our performance over time. You see, we're up here at all-time highs, and the S&P 500, the orange chart, is less than half. Of course, our secret weapon here is the Mad Hedge Profit Predictor. That's a market timing index, my secret weapon that has a 90% accuracy rate. If you're right 90% of the time and you stop out 10% of the time quickly, you have a license to print money. Absolutely. Just look how much I spend every year. It's an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators. It took a team of mathematicians 1,000 hours of calculations to create this one tool. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. It does the work of seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy that updates itself 1,000 times a day. That's what our timing index does. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your trading profits. This is 3 years of market timing indicators. You can see we get lots of buys at market bottoms, sells at market tops, buy, sell, buy, sell. You're laughing all the way to the bank. I'm not the only one using algorithms. Some 80 to 90% of all trading in the market is algorithm driven. I was in Miami a couple of years ago and passed this super yacht. Look what it's called, algorithm. Obviously, it's working for more people than just me. This is a year and a half of buy and sell signals. You can see we get lots of buys at market bottoms. This was March of 23. This was the famous October 26 low, putting out a very strong buy indicator. And you can see the recent low here in April. So again, buy, sell, sell, sell. It's easy as falling off a log. Why cover all asset classes? We cover everything in the universe that moves. So information about one asset class sheds light on all the others. For example, knowing what the bond market's going to do and therefore interest rates is incredibly useful in trading stocks, commodities, foreign currencies, and so on. Some asset classes will be doing great while others are dead in the water. Yeah, covering all asset classes will point you to where to trade the winners. Give yourself every advantage. Know what's happening all the time, everywhere. There is a method to my madness. The Fed is done raising interest rates. Markets are now discounting the first rate cut in September and maybe more. All interest rate trades are back in play, including bonds, REITs, precious metals, financials, and foreign currencies. Bull market in stocks continues, but needs to catch its breath first. Expected dull summer. Use the weakness to load the boat. Oil prices are weak on a slow Chinese economy. Tech bullback is back and will continue for years. Time to go aggressively long stocks and bonds. Commodities could explode anytime when actual interest rate cuts begin. So precious metals, first and foremost, what we're trading this week and today, because it is the most attractive asset class this minute. Precious metals do well when interest rates fall and when there is a flight to safety, when people are fearful of losing their money elsewhere. Silver has gone ballistic on Chinese speculation, which is taking up to $32.70 an ounce. It's headed to 50 by next year. Gold follows by half of what silver does, which is usually the case. It's at $24.60 now, headed for $3,000 next year. Solar panels are driving global silver demand. Global investment in solar PV manufacturing more than doubled last year to around $80 billion. Miners are expanding their operations and ramping up production as prices for the precious metals climb to decade highs. Demand for silver from the makers of solar PV panels, particularly those in China, is forecast to increase by 170% by 2030 to roughly 273 million ounces, or a fifth of total silver demand. That is a lot of silver that has to be bought soon. So buy SLV and Wheaton Precious Metals on dips. Here's gold. We had a really dramatic move upward since October, and we still are trending upwards. We're looking for another 30% by 2025. And if you like gold, you'll have to like the gold, the world's largest gold miner, that's Barrick Gold. And again, trend is very solid to the upside. We're looking for $40 in Barrick Gold by next year, and that is a gain of 120%. By the way, you can buy options on Barrick Gold. You can buy leaps. Every instrument is out there. If you like gold, you should like silver even more. That's the better play because of industrial demand, solar demand, and electric cars. And again, very steep uptrend here. That's gone from $20 to $29.50, or almost a 50% move in just 3 months. And if you like silver, You'll like the 2X silver even better. This has gone from 23 to 47 in 3 months. And we're recommending you buy this on dips also. Stocks, we've just seen a blow off top as the Dow top 40,000. The investors are pouring money into both stocks and bonds, according to the Bank of America. Equity funds saw 11.9 billion inflows, while bond funds drew in 11.7 billion. NVIDIA has triggered split fever in the wake of its own 10-to-1 announcement, and traders are piling into the candidates of other tech shares that haven't split yet. Secret. If you subscribe to my service, we'll tell you all what those names are. There's actually 36 of them. Department of Justice wants to break up Live Nation over their ticket monopoly. Thousands of young traders are getting wiped out following the advice of IM Trading, and the government is rushing to shut them down as fast as possible. Not everybody in my industry is honest, as it turns out. And not everybody has experience, certainly not my levels. And of course, the biggest bear on Wall Street turned bullish right at the market top. Poor old Mike Wilson will probably be driving an Uber cab next year. He raised his 12-month target to by 20% to S&P 5,400, which is basically where it is now. Ouch. Expect a dull summer and then a rip-roaring fall as the bull returns for the next leg up. So this is what we were discounting last year: high inflation, an oil shock, labor shortage, supply chain headaches, Fed interest rate rises, quantitative tightening, and poor earnings. This is what we're discounting this year: plunging gasoline prices, rocketing commodity prices, a stabilizing supply chain, record low 3.9% unemployment, better than expected earnings, 1.25 trillion in stock buybacks, falling interest rates, and a weak dollar. The trader's dilemma. The choice now is between basically 5 stocks that have gone up in a straight line for 7 months, or several interest rate sectors that may be dead money for a few more months. Avoid the frustration trade, the one you should have done last October 26th at the market bottom. Wait for the ideal entry point and let AI, our AI, tell you exactly when and where that is, no matter how long it takes. Chasing a bad trade is almost always a terrible strategy. Big chunk of 2024 performance was pulled forward into 2023, and you already made that money, so don't go chasing it now. Sole exception is energy, which was driven by demand from the Chinese economy. With markets at all-time highs, 90-day T-bills for a couple of months yielding 5.25% don't look like such a bad idea. We run barbell portfolios here, which are 75% big tech, 25% of domestic recovery plays. Big tech, it turns out, employs 2% of the US workforce and is about 30% of the market cap now. NASDAQ, of course, was our big call last year. We begged people to buy it at 12,500. It just hit 17,000. We're looking for 20,000 by the end of the year. Buy NASDAQ and buy technology stocks. It's all about the data, the new digital gold. Microsoft is a front runner here because they own ChatGPT, the front runner in the large language models. And it turns out that Microsoft knows every keystroke you've made on your computer for the last 30 years, and AI is telling him how to use it. And boy, are we getting some fascinating information from Microsoft. Meta is another one. It knows every social media post you've made for the last 20 years, and they've done massive cost cutting, which has enabled their stock to double in the last year. Amazon knows everything you bought or thought about buying for the last 25 years. Incredibly valuable information. Now they have AI to maximize the profitability of that data. And NVIDIA, of course, the golden boy of 2024, it's gone up 300% in a year, and it's still moving. And our target for this year is 1,400 up from 380 a year ago. So keep buying NVIDIA on the dips, even though it may seem insane. They have a monopoly, a global monopoly on the best GPUs, and they've just moved from a 2-year product cycle to a 1-year product cycle, which means more chips, more money, and more profits. Alphabet, of course, is one of the early geniuses in AI. It knows everything you search for over the last 20 years. You think that's worth a few bucks? Absolutely. We're looking for Google or Alphabet to hit $250 by the end of this year. And by the way, if you wonder what these blue boxes are, these are what our AI algorithms are telling us to do, what to buy and when to buy it, and how far it can go. So incredibly valuable information. If you're looking to, buy every dip and sell every rally, this is one of the best tools out there. Palo Alto Networks, hacking never goes out of style. Even though we got a nice sell-off on weak guidance, it always comes back. There are only 3 major companies in this sector who have essentially a monopoly. By Palo Alto on dips, we're looking for 400 by the end of this year. Second half of the barbell benefits on falling interest rates and a global recovery to begin in 2024. The upside potential for recovery stocks is greater than tech from here. Some of these stocks have not moved for 5 or 10 years. Focuses on economically sensitive cyclical industries, makes a great counterweight to high growth technology. We could spend years rotating back and forth between the tech and non-tech parts of this portfolio. Of course, front and center is JP Morgan, the quality bank of the United States. Banks love recovering economies, and falling default rates are hugely overcapitalized, and they're moving into online banking and closing their expensive branch networks to cut costs. Next time you go visit the bank, it may not be there. It may have gone totally online and just given you a website to go visit. We're looking for 250 for JP Morgan by the end of the year. And we've been in this one very early with several options and strategies along the way. Visa is a call option on the growth of the internet because almost all internet payments are made via credit card, and Visa is the largest one of these. Looking to buy the dip here with a target of 400 this year. Union Pacific is a great coincident indicator for the economy as a whole. And this chart shows you that the economy is slowing down, and that'll bring lower interest rates. But at some point, we'll get an economic recovery, so you want to be buying the dips in Union Pacific. Also, in an economic recovery, you have to move a lot of small stuff. So use the weakness in FedEx to get a position here. We can show you how to do it, to get like a 2-year options position. And an entry point is setting up. We're looking for 300 by the end of the year. And Berkshire Hathaway is essentially the one-stop barbell portfolio. It is very heavy in financials and Apple. It's the largest outside owner of Apple. And it bought back 25 billion of its own stock in 2023 and will buy every dip in 2024. So again, we've been in this stock forever. We're looking for 500 a share by the end of the year. Freeport-McMoRan, there is a coming copper crisis and a coming copper shortage. That's because copper is needed for EVs, solar panels, the war in Ukraine. When you're using up millions of artillery shells, that's a heck of a lot of copper to go into the shell casings. And decarbonization of the grid means you need a lot of copper. It all adds up to $70 a year by the end of the year by Freeport-McMoRan on dips. They're the world's largest producer of copper. And you can see we've already had a heck of a run here from 35 to 55. We're looking to tack on at least another 20 from here. So bonds are back from the dead after churning and going nowhere for many months. Last week's Treasury auction bombed and put in an intermediate term bottom for bonds. Oversupply is a big problem. Turns out we have a government that likes to borrow a lot of money. How about that? Traders are nervous about the inflation data. Bond investors are making a killing, though, with the U.S. Treasury paying out $900 billion in interest rate payments in 2023. That's double the average cost of the last decade. Coupon clippers are having a feast. It's another reason for the Fed to cut interest rates soon, to lessen the backbreaking burden on the U.S. government. Of course, if governments do see an interest rate cut, they'll just borrow more money to reach their maximum. After being held hostage by zero rate policies for almost 2 decades, U.S. Treasuries are finally reverting to their traditional role in the economy. Bonds are respectable again after a long winter. Buy TLT on dips. And here is our long downtrend. We have the potential of a head and shoulders bottom setting up here. Look to buy TLT on dips. We're looking for 110 by the end of the year from 92 now. And the yields will also go plunging. We had a high of 508 last year. We're looking to see a 3.5% by the end of this year. So bonds starting to look like a great buy here. Foreign currencies, we are literally within days of a major peak in the US dollar. Most currencies are hitting 2 months highs, expecting interest rate cuts for the US dollar. And whoever cuts interest rates usually has the weakest currency because you're paid less to own it. Japanese yen has collapsed to 160 and is looking for lower lows. Bank of Japan intervened with 62 billion in yen buys, and it had absolutely no effect. Avoid the FXY. Chinese yuan remains weak because of their terrible economy. Their international trade is collapsing. Turns out no one wants to trade with a warmonger. Declining exports, collapsing foreign investment, minimal population growth all adds up to a weaker Chinese currency. Okay, you need falling interest rates to guarantee a falling dollar for 2024. Here's the Australian dollar, one of our favorites. It's a call option on recovery in the global economy because Australia is a huge exporter of metals. And we like emerging market currencies. This is the high beta currency. We're looking for a 40% gain this year, and we've already picked up quite a lot. And we like the euro, believe it or not, looking very close to an upside breakout here. Get ready to start buying every dip in the euro. Energy and commodities is all about the takeover game right now. Chevron took over Hess for $53 billion, creating the second largest oil producer. The approval clears one hurdle, but still requires regulatory approval and must face an arbitration battle with Exxon and CNOOC, which is the China National Oil Company, Hess's partner in Guyana. Buy CVX on dips. Copper slides this week, down 10% in 3 days as the extent of Chinese speculation becomes clear. Takeover battle for Anglo-American continues with the company turning down the latest 49 bid. And again, this is another copper play. While Anglo's copper assets have long been coveted by rivals, its complicated corporate structure and unusual mix of commodities largely deterred potential suitors until now. So here's oil. As the economy slows, so does the price of oil. We could get back into the low 70s, high 60s again before a turnaround. After that, we're looking for 95 again on an economic recovery. And you know, any rallies you get in oil are going to be temporary because it's basically going out of business. It may take 30 years to do so, but I think eventually we will see the $10 a barrel that we saw during the pandemic when the futures market hit negative numbers. So this is the greatest double top of all times in oil prices. This is a sector you trade but don't marry for sure. The harsh truth is you really need my help. The majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The solution to that is to get educated and let me help you do it. Okay. Fidelity did a 20-year study, and learned that their top performing investors were dead people. Why do dead people do so well? Because they never sell. You need a real pro to guide you through the market maze. The market is not monolithic, and 95% of it can be completely ignored. There are a few great sectors and a lot of awful ones. You can earn a 10x return on the great ones, but get wiped out by the losers. Let a 55-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. Of course, Mad Hedge performance is the big reason to do this, averaging 51.31% over the last 12 years versus 23.95 for the S&P 500. Richard made millions following my trade alerts. He now spends his retirement restoring vintage aircraft and flying them over the California coast. Greg turned $100,000 into $3 million solely on my trade alerts. He bought a new home in Orange County, California, with Tesla solar panels, a Tesla Powerwalls, and Tesla Model 3, and still had enough money to send 3 kids to college. Guess where he made his money? Buying Tesla. And here's my friend, Bob.
This is Bob. I live near Denver, Colorado, and I'm hiking on top of the Continental Divide. 9 months ago, I joined John's Global Dispatch Service and was so impressed with the profits I made that 2 weeks ago, while hiking in the Dolomites, I joined his concierge service. And in 2 weeks, it is 100% paid for it, and I couldn't be happier. Life is good. John really helps. The other day, I had a text message exchange with him regarding some concerns I had with TLT. Put spreads, he encouraged me to stay in. I did, and today they went out at 95% of maximum potential profits. And that's the way it works for me. I hope you all do well trading yourselves. Thank you.
Okay, so what do you do about this? Well, stocks buy the next tech dip, bonds buy dips, commodities buy dips, energy buy dips, currencies buy foreign currency dips, precious metals buy dips. If you were not up 51.48% in the past 12 months, as I was, you were reading the wrong newsletter or following the wrong trade mentoring service. 51.48% average annualized return. You get those kind of numbers, you get to do things that other people don't do, like take the owner's suite on the Queen Mary from New York to England. Once you get there, you can take the Orient Express to Venice. And once in Venice, you can always go island hopping by helicopter. This is the very long view, and this is really the most important part of this presentation. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That will create an economic boom that will last another decade starting in 2023. And that's me at my chalet in Zermatt watching people climb the Matterhorn. The last time we had an identical demographic situation as today, the market went up 20 times in 18 years. Are you ready for a replay? That's when the Dow went from 600 to 12,000. Well, let's say we make 2009 as the bottom, go up 20 times from there. That takes us up to 120,000 in 18 years or by 2030. And if you think I'm smoking California's biggest export, think again. We're already 2/3 of the way there. We're right about here at 40,000. So one more triple to go to get us to 120,000. Except this time it's different. We now have the AI tech turbocharger. Tech is accelerating on all fronts simultaneously, and the pandemic greatly sped up the rate of change. The development of functional quantum computers means that computational ability is about to increase 1 trillion-fold at no cost. The world's major computational challenges will shortly be solved, such as weather forecasting and cancer cures. All major human diseases will be cured within 10 years. Needless to say, barbell stocks dominate in this scenario, will account for the bulk of stock market gains in our lifetimes. The 90s had cheaper computers, cheap operating software, and a new internet. The 2020s will have 10 times this number of new technology drivers. And this is a quantum computer on the right. It's basically a large freezer because it has to operate at 274 degrees below zero. So he'll show you how to play the next 90,000 Dow points. Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 51.48% in a year. Follow my research and market beating trade alerts, and you will rake the profits in. Let a Marine combat pilot steer you to big profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. And no, that's not the plane I flew in Desert Storm. That is a 1932 de Havilland Tiger Moth made out of Irish linen and Norwegian spruce. Notice the design flaws. Gas tank directly over your head and no brakes. That's why we can only land this thing on grass fields. This trading history can be yours. This is a typical month for our service. You can see we bought S&P 500, made 16.3%, sold short treasuries, made 8.6%, bought the Russell, bought Amazon, bought Apple, bought Biogen, oops, stopped out of Biogen. We always stop out of losers very quickly. It's easier to dig yourself out of a small hole than a big hole. The biggest mistake I see beginning traders make is that they don't run stop losses that are tight enough. Then we bought Palo Alto Networks, sold short the yen, sold US Treasuries, bought the SPYs, and bought gold. And 10 out of 11 trades that month were profitable, which is really a very typical month for us. It's just a matter of time before barbell stocks break out to new all-time highs. Watch this space melt up for the rest of 2024. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. And yes, that is a 24-inch rainbow trout, which I caught in northern Nevada. Unfortunately, it was catch and release. Here's how algorithm works. It predicted an upside breakout in NVIDIA in January. So we sent out a buy recommendation back when NVIDIA was at the 490s. And this is what it looks like. Buy NVIDIA at 480 or best. Opening trade. Portfolio weighting of 10% meant you needed to buy 21 shares. What happened? Well, NVIDIA went up 45% in 22 days. Did we just sit around and pat ourselves on the back? No. We put out a sell alert, and this is what the sell alert looks like. Take profits. And on this particular trade, $10,000 investment made $4,515 in just 22 days. Did we abandon NVIDIA after that? No, we just went in there and kept on buying every dip. In fact, NVIDIA was our most active trader over the past year. We do have a long history of 10 baggers. That's stocks that went up more than 10 times after we recommended them. We did Zoom when it first went public. That went up 10 times. Lam Research went up 10 times. NVIDIA went up 30 times from our original $38 recommendation. Square went up 25 times. Moderna, we recommended pre-pandemic. That went up 40 times. And Tesla, the granddaddy of them all, we recommended it $2.35 split adjusted, went up 178 times. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. And this is me struggling to smile while sending a trade alert to you from the coast of North Africa, and it is 120 degrees. I've really sent trade alerts from cliff faces in the Alps, from the back of camels, and recently the Galapagos Islands in the Pacific. You can trade anywhere, anytime. Thank you, Starlink. That's all I have to say. With my global trading dispatch, you get instant trade alerts sent out at market sweet spots, about 200 a year. That averages around one a day, and all the reasons to execute them. Live biweekly strategy webinars with an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world, more educational videos and webinars than you can consume in a lifetime. Access to a 16-year database on investment idea, searchable by names and ticker symbols. And I'll even give you the name of a surfing camp in North Africa, which has a seniors division. Watch out, it's harder than it looks. I broke my nose right after I took this picture. This is the one-stop shop. Learn all you need for every level. It's for individuals who want to understand what is happening with their retirement funds. It's for people who want to learn how to trade for a living. Get the financial education of a lifetime. It's for smaller institutions and financial advisors who can't afford an in-house research department. Get in before the next melt-up begins. With our service, you get my global market comments in your inbox every morning, 5 days a week, and early enough so you can act on it. You also get the Mad Hedge hot tips, the 5 most important things that happened today and what to do about them. This is what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge you $12,000. That's what I charge my concierge clients who get my personal cell phone number so I can act as their investment 911. And I'm not going to charge you $3,500. That's the full price of what I'm offering you on my website. This is the real deal. Creating this product cost me millions of dollars. With the best customer service in the industry, running it costs millions more. 6 months for just $997. That is a 71.5% discount to the website price. It's a limited time offer. We can only take 25 new subscribers at a time, so it's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right, and you will find a offer link there, madhedgefundtrader.com. That takes you to the dedicated sales page. Let me make the money for you to pay for your own subscription. You make the trades. Discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Just click on the chat box on the right. I'll give you a money-back guarantee. If you're unable to make money with Global Trading Dispatch, you can get 100% refund anytime during the life of your subscription. Just click on the chat box on the right. Here's the offer you can't refuse. $600 for just $997. Buy now and you will instantly receive a trade alert with an extremely high probability of success. Then you can execute immediately and make some of the most serious money in your life. 95% of these trade alerts make money. I can see the orders have already started coming in. Let me take a look and see who they are. Okay, we have Matthew from Woodbury, Minnesota has just come in. Thank you very much, Matthew. Look in your inbox and you can still execute that trade. You can get a great price on it today too. You can execute, and this is a good entry point to do it right now. We also got another order from, let's see here, Karen from Dallas, Texas. Karen, thank you very much. Promise to work hard for your money. Check your inbox for that alert. And we also have one here from Karina from Riga, Latvia. Thank you very much, Karen. Look forward to working with you over the coming 6 months. So this is the trade alert I'm going to send you the second you subscribe. You have to go through 1,000 charts to find one that's good. Let me do the heavy lifting for you. Well, I'm not going to tell you, is this a buy or a sell? So if you're going to work with John Thomas for the next year, who is John Thomas? Well, I come from a humble background. I grew up on a remote farm in Southern California, lived the classic American childhood, played Little League baseball, was the oldest of 7 kids, became an Eagle Scout. There wasn't much to do in the old days in California but hunting, so I picked up a job as a paper boy for the Los Angeles Herald Examiner. I found the stock pages, bought IBM at 20, sold it at 30, and suddenly found a far better way to make money than delivering newspapers on a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I'd visited more than 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see much of a future in that, so the government sent me to Southeast Asia for a few years of research, where I learned how to fly and jump out of perfectly good airplanes. There, I advised the militaries of America's Asian allies. Of course, in those days, doing research meant carrying a 45 caliber Sten gun everywhere you went. And after 10 years of government service, all I got was this box of medals, which I trot out once a year on Veterans Day. As the war wound down, I became a foreign correspondent for The Economist. When they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War and cover the rest of the continent all the way out to India. That's me on the border with North Korea. That's me in Beijing. Notice how skinny everybody is. It's because there was no food. Big famine going on at the time. 50 million people died. I figured out very quickly you didn't have to be that smart to make money in the stock market. Otherwise, they would have run out of smart people a long time ago. So I joined Morgan Stanley. After 10 years there, I started my own hedge fund. And yes, the years have been cruel. This is my ID card from Morgan Stanley from 1983. And that's me losing the All Japan National Karate Championships, never enter a karate final with a broken hand, which I did. Of course, when the government called me up and asked me to serve my country, I didn't hesitate. I became a combat pilot and also used to help manage a tank battalion. Yes, and that is me about 20 pounds heavier. Spending time with the Marine Corps, great way to lose weight. Semper Fi. I rapidly became the top performing hedge fund of the 1990s, eventually bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. You get to collect the latest hot car, fly your own private plane around Europe, go marlin fishing in Mexico, and collect vintage Rolls Royces. I now spend my days pursuing my first love, finding winning trade alerts, but I now do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There is far more satisfaction leveling the playing field for the average guy and teaching him how to trade, and that includes you. If I can take a $50,000 account and turn it into 500,000, that is more job satisfaction than I can get anywhere. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco these days, it's probably me. And that, yeah, those are the planes I fly. The ultimate luxury, of course, is to give to those who need it. I'm a major donor to wounded warriors. When the wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. And that's me searching in my in-laws' wreckage, looking for a ring. Eventually, they did find it because platinum has a much higher melting point than gold. All the gold rings and the fires completely disappeared. Okay, so when you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wines, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. So it's in that spirit that I traveled to the famed World War II fighter station at Biggin Hill in England to meet Mad Hedge concierge member Peter Monk. Peter was a poorly paid pilot for Ryanair when he first signed up for my global trading dispatch. After doubling his money in the first year, Peter upgraded to my concierge service. Then the money really started to pour in. Peter plowed his Mad Hedge trading profits into restoring a 1940 Battle of Britain veteran, a Supermarine Spitfire Mark IX, in his backyard, begging, borrowing, and trading for parts all over the world. He eventually built his fleet up to 16 flying aircraft, which are today worth over $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild and blustery day when we took off and headed for the English Channel. Even though the plane was 82 years old, we managed a brisk 250 miles per hour over the English countryside. The Spitfire could outmaneuver any plane the German Air Force threw up against it. This particular plane is credited with shooting down 2 Messerschmitt Bf-109s, and it's easy to see how. We found a clear piece of sky over the White Cliffs of Dover between 2 big fluffy cumulus clouds and commenced a full-on aerobatic flight test. Pilots always want to see what I can do in these old planes, and this time was no different. I executed multiple loops, barrel rolls, chandelles, lazy eights, Immelman turns, and wingovers, careful never to exceed 1G in limitation, or the wings might fall off. Spitfires can dive like crazy. We dropped from 8,000 feet to 2,000 feet in seconds. Then it was back to Biggin Hill for a perfect 3-point landing and a pint of beer. Let me make millions of dollars for you as well as I have done for thousands of other followers over the last 16 years. I look forward to working with all of you. And if any of you get airsick watching this video, please let me know and I'll try and tone it down a bit. And that is diving straight down to the White Cliffs of Dover. And that is the Spitfire. So here's the offer you can't refuse, 6 months for just $997. Click on the chat box on the right, and I can see we've had several more people come in the meantime. Okay, here's Raj saying, great video. And let me go through the questions and see what we can come up with. What are your thoughts on GameStop and its recent spike in the derivatives market? Don't touch it with a 10-foot pole. This is not investment. This is not even trading. This is pure speculation and gambling. And your probability of making money in this game is actually very low because guess what? One big player has all the inside information. He knows what he's going to do with his position. You don't. So it's a guaranteed loser's game for the average person. Okay, is today's move in silver enough to buy some silver? Yes, absolutely. But scale in, divide your position into quarters, buy a quarter now, a quarter lower, a quarter higher, and eventually end up with a nice average price. We are looking for $50 in silver probably by the end of the year. Okay, another question. Let's take a look and see. I can see my phone has been buzzing like crazy, so we've got a lot more new subscribers. And let's see here. We have Bill from San Diego, California. Bill, thank you very much. Look forward to working with you. Check the trade alert in your inbox and execute it now. This is a great place to execute. Okay, we have Maria from Miami Beach, Florida. Thank you very much, Maria. Look forward to working with you. And what's the other ticker symbol for Silver, well, the 2X silver ETF is the AGQ, and it is down substantially today. That's why we're putting out, recommendations that people buy it at these levels. Okay, let's check this. Okay, here's Joseph from Seattle, Washington. Thank you very much, Joseph. Check your inbox for the trade alert. And what's the renewal rate? The answer is once you buy the service, you're grandfathered for life. We don't do price increases on existing subscribers, only new ones. And by the way, we're overdue for a price increase. So if you buy now 6 months for just $997, you have a chance to lock in at a low level for basically forever. Remember, this is a service that costs $3,500 a year if you go to the website and buy there. Okay, let's read these other questions. Let's see. Okay. Okay, reading through this. What are the odds of a Fed rate cut in September? And how many cuts do you think there will be? Well, I think once the Fed starts cutting, they will keep cutting every meeting a quarter point, depending on what the inflation rate is doing. And we could get, 3, 4, 5, even 10 quarter point rate cuts over the next 2 years. That's why I say we're about to enter a golden age for the bond market. Bonds do really well in a rate cutting situation. And by the way, you also get a very weak dollar. The currencies do great. Oh, and what else does really good when interest rates are falling? Gold and silver. So yes, there is a method to my madness. There is a reason why I'm making the recommendations that I am. Okay, what else do we have here? Okay, just reading the questions. Do we expect a strong or a weak earnings season for tech stocks in the next 2 quarters? I expect strong. Of course, we aren't going to, continue to grow at the recent rate, which is up 100%, but it'll keep growing nonetheless. Remember, even during the pandemic, tech earnings kept growing. It's just a natural feature of the market. Technology is developing far faster than we can understand and throwing off profits that we can't possibly imagine. George is asking, what about the Japanese yen? Don't want to touch it until I see a major turnaround. The other currencies look much more interesting here. That's the euro, the Australian dollar, and the emerging market currencies. The Japanese have been very hesitant to support their own currency. Of course, a weak currency is a great stimulus for the economy, and that's why the stock market in Japan has been going up so much lately after a brief 39-year pause. Yeah, absolutely. Okay, any other questions? Okay, another order just came in here. Let's see who it is. We have Douglas from Old Pine, South Carolina. Thank you very much. Look forward to working with you. Check your inbox for the trailer and execute it, please. There's a really good price right now. Okay, let's see what else we have here. Someone else just came in. Okay, we have David from Tampa, Florida. Thank you very much, David. Look forward to working with you. And we have Jill from Chicago, Illinois just came in. Thank you very much, Jill. Look forward to working with you too. And we have a whole bunch now coming in, more than I can read. Okay. Got that one. Got that one. Got that one. Got that. Okay. Any more questions? Yeah, this is just reminding someone, they subscribed at 9.97 in March, and the rate will be 9.97 as long as you agree to the renewals every 6 months. Oh, and by the way, if you buy today and not happy with the service, you don't understand it, you don't like it, you don't like the market, just send us an email. We refund immediately. We have a full refund policy. With that said, we very rarely get refund requests. No more than a handful this year. Okay, let's see if we have any more questions here. Okay, let me go look over here. Here's another good question. Do you only recommend options, or do you have other recommendations in your trade alerts? Every trade alert we send out has a recommendation for a stock, an option, and an ETF. That way you can tailor each recommendation to your own experience level and risk tolerance, and who makes the most money over time? The stock owners, because if you imagine you bought a call option or a call spread on NVIDIA at $38. Well, if the option expired, but the stock kept going up for 10 years. So over time, it's always the stock players that make the most money. They don't have to worry about volatility, time decay, expirations, or all this other stuff, or options called away. Okay, let's see what else we have here.